Hey guys, what's the most difficult thing to manage inside of a household? It could be the wife, could be the kids, but usually it's going to be finances. The money is horrible. It shouldn't be. I say it's horrible because people usually live inside of a gray area. They know what bills they have, they know how much money they have coming in, but they don't really just sit down and put it in black and white like you have right here. It's usually all in one account. So direct deposit, the money comes into one account. The money you spend at McDonald's, at 7-Eleven, at Walmart, your bills, your savings, all of that may be inside that one account. Some people split it up and they got, a savings account as well, which maybe doesn't get utilized properly. Or maybe they feel that all the money should be in one account or the other, or 50-50. There is no wrong answer to it if you're living comfortably. As long as you make more money than what you're spending, then you're golden. Now, this is basically a template that I use for myself and other people. And these exact figures, these are, imaginary figures. I'm helping a buddy of mine. He's about to have a new family, and he's having a house built. Super proud of what he's got going on, but I know that he's going to be overwhelmed by all the new additional expenses. And he's one of the guys that has, two accounts. He's got a nice savings account and he's got a nice checking account, but he wants to better manage his money and see where it's going and control his spending so he doesn't go over. And I'm hoping that this template will help him out. Okay, so this guy, he gets 2 paychecks from his employer a month, every other Friday. So it's not set like the 1st and the 15th. It's every other Friday. So that really fluctuates on dates. And then he's going to have, he doesn't have it yet, but he will have a rental property income. He's renting out the other half of his duplex. So this is what we're going to have. This top square up here, the purple one, that is going to be a checking account, and it's going to be direct deposit. The only thing you're going to use this account for is to have your direct deposits go into it. Alright? Money's going to go in there, and then money's going to come out to these other accounts down here. You're not going to swipe the card. You don't even need a card for it. So, you set up this account, you set up your direct deposits, your paychecks come in twice a month, your property comes in once a month. Now we're going to go right over here to the bills, because you can't live without paying off your bills. None of these other accounts are even worth looking at if you don't take care of this red bill pay account first. Now this is going to be all of your bills. Everything that you pay on a month-to-month basis, plus a little extra that I'll get into. So before we start talking about what the bills are, because that doesn't matter, it's different for each and every one of you guys, same with the dollar amounts, I'm going to talk about something real quick. A lot of people, they get in that gray area because they don't want to try to define and separate how they're going to pay their bills. Like this guy, I get paid every 2 weeks. How can I set up my payments when I don't know exactly what days I'm going to get paid? So I just kind of put it all into one account, and then I pay them as they're due. Like I said, that's okay, but here's a way to fix that. You make everything work. You know you're going to get paid on basically the first Friday and then the third Friday of the month. So with that being said, that's not always the case, but with that being said, I like to use the dates the 7th and the 21st in this kind of scenario, because you know that there's going to be a Friday before the 7th and there's going to be a Friday right before the 21st of every month. So some months he's going to have extra money roll over twice a year. He's going to have an additional paycheck, and he can do with that, later on. Okay, so I schedule, and the mortgage may be due on the 5th. The car may be due on the 19th or on the 25th. It doesn't really matter. You have a little bit of grace period, and right now setting up this account, I kind of say, you take the little risk at it, but as long as they get paid within that grace period, then they're okay. So check your terms. Make sure that you're not going to go past, your grace period where you get additional fees. Now, as time goes on, you're going to have money roll over into this account. And when that money rolls over, it's going to start building a cushion. Okay. Another idea is if you've got, say this guy's $2,700. If you've got $2,700 sitting in your savings and you want to go with this template, move $2,700 over right now so you got the money there. It's always going to be there. Your balance should never drop down below $2,700, but you know it'll always be there just in case. And that's something that I recommend, is at least keep $1,000 extra in there just in case something goes haywire. Your paycheck shows up late, your rental property doesn't pay, something along that case. Okay, so what he's putting in is $2,700 a month, and these bills laid out here. Now all of these, the mortgage, car loan, car insurance, cell phone, hey buddy, I'm sorry to tell you, but you're going to get a home alarm, you're going to get pest control. So you don't know that stuff now, but in the end you're probably going to get those. Internet, cable and internet usually together. All of those are pretty much fixed amounts. So let's talk about the ones that are not fixed, the fluctuating amounts. Water, electricity, different utilities. Now, on every bill that I have, as you can see up here, I've rounded them up to the 100th or to the 50th. So I always round up, never round down. And I like to do average. For utilities and stuff, I like to get an average. Now, this is what I pay. These are actually my figures for my water and electricity. He's not moved into the house yet. It hasn't been built yet. So didn't really have much to go on. But what I've done for myself is I went back 24 months and I looked at how I was spending my money on water, and then I'd done an average, and that's what I came up with was $100 rounded up. In actuality, it's about $70, I would say, but I like to round up because some months are going to be high. You know, in the summers, I water my grass more. I got a pool, so I spend more money. So in my water bill account, you know, I'm going to pay them $100. I'm going to have $40 there as credit. The next month I'm going to have $80 in credit. And then I'm just going to keep paying them $100 every single month. Eventually, I'm not even going to have a bill, but as I'm paying that bill, $100 a month, and I'm going to use $60. Well, then when the bill does go up in the summer, I've already got all that cushion there, that equity, to take it up. Now, for some people, they may not like that. It may be hard for them to understand, but it works out great for me. Same thing goes with electricity. You know, my average bill is about $150, but then in the summers it goes up to about $220. So if I'm paying $200 year round, that's a good solid number, and I know that when the peak times come, there's already that extra credit inside of my account to compensate. So that's how I come up with the utilities. Do the same thing for gas and whatever other fluctuating accounts you have. Now, for my buddy, he's got to pay a deductible of $1,000 a year. So what I recommend for him to do is take that money out now. He just had a big bill that he had to be seen, and they quoted him a big bill because all of that was going to go to deductible, and he wasn't used to that, so he just declined the service altogether, and now he's got to deal with it. So here's what you can do to fix that, man. You can take $100 out of every paycheck and keep it inside this account and use it, or put it inside of a separate checking account, or put it inside of a medical spending account which your employer offers, and that's pre-taxed. So that's something that you might want to look into. Go ahead and get that pre-taxed medical spending account, and you're going to have to pay $1,000 a year in deductible, and whatever you don't spend, well, then it rolls over until you finally do spend it. And something else down here, this is a small amount, but every year you've got birthdays, anniversaries, different things, gifts that you got to buy. The neighbor's kid you buy Girl Scout cookies from. You're going to spend that money, and this is kind of also giving a little bit of cushion. I call it miscellaneous funds. In mine, my miscellaneous fund is not with my bill pay account, but with this guy, I don't see it really hurting. Got gift fund, new baby, date night, some things like that. You can put that in there. Basically what you're doing is saving up to buy those cookies. You're saving up to take your fiance out on a date. You're saving up for whatever, for a new baby. You know, it's $50 a month. It's very little. You can do that inside of another account. You can do that inside of your, I don't want to say in your savings account. Savings I don't think should be touched. But anyhow, there you go. So I kind of spaced it out. So this is one solid account. And then you got your medical deductions and co-pays and all those other things. So that's going to give you $1,200 a year right there. I really think that should be inside of a medical spending account. And then you got those miscellaneous funds. Now, with USAA, you can have as many accounts as you want. And they're all free. They don't cost you anything. So I would probably divide that up if I was in this guy's case. Now, so $2,700 a month right there. Every single month you're going to set up an automatic transfer, so you don't even got to worry about it, where on, say, the 5th or the 6th, you're going to transfer over X amount of dollars. Say $1,400 you're going to transfer over. And then the remaining you're going to send on, say, the 19th or the 20th. And these are automatic payments. So you don't have to worry about it. You can go to sleep and never worry about any of these bills right here being paid again. Automatic from here to here, and then automatic from your account through bill pay, paying out to each one of these guys. And now the same thing. Every other Friday, and this is, I have a spending account myself. Mine is pretty close to this one right here. Every other Friday, when I receive my check, the next day, I receive an automatic transfer from my direct deposit to my account. So I would get $100 on the 7th and then $100 on the 21st. Mine is actually a little different than that, but or the dollar amounts are different, but same thing. Every other Friday I receive X amount of dollars. And this is money that basically you're willing to throw away. This is going to be for gas, this is going to be for 7-Eleven, this is going to be for whatever. Now if you've got a big truck, obviously that's going to be much higher. If you're driving a Prius, well, then you could probably spend $200. Now, really, all this you got to tailor to yourself. Now we're moving over. Now, so we've spent $2,900 this month. So how much money do we have left? Here we go. I recommend that as a new property owner, that you build up a little account, a little nest egg. So when you got to replace a window, you've got the money. When you've got to replace, what else is there? Sorry guys, my wife just texted me. Whatever you got to replace. Door handles, locks, windows, maybe even carpet, hole in the wall. Any property damage that you can't get covered through the security deposit, you can get right here. I don't know what she's saying, so I'm going to cover that up for a second. Okay, so I recommend $200 a month, and do it at the end of the month. After all your bill pays come out, after your spending account, at the end of the month, you've got, like it looks like here, just take out $200 a month. That'll be $2,400 a year. You're probably not going to spend it, but eventually, someday you will. When the AC goes out in 5 years, you're going to have the money there to cover it. When the stove or whatever you got inside the house needs to be replaced. You don't want to fall underneath your insurance and pay a big deductible. So there you go. That's just saving for future events. And then everything that's left over goes to your savings. In this case, I said $400. Goes to savings, goes to your underneath your mattress, goes to your IRA. Whatever. There you go. So this is a monthly basis. The first things that you want to do is divide up your bills by paychecks. Make sure that your money's coming in on time. And then shoot your money over there. Now, I highly, 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 highly recommend this. It's worked out for me. I personally have gotten out of debt. And I stick to this. And it keeps me on track. Over here, this can be more than one account. It can be an education fund, a savings account, and an IRA. It can be a money market, it can be a CD, it can be whatever. This is just the money that you're saving. Now these over here is money, you're not going to see this again. This is